European investors, we need to talk. SCHD is often called the holy grail of dividend-growth ETFs, but if you're in Europe, you can't buy it. So what's the next best thing? That's exactly what we're going to figure out today. Welcome to the channel. I'm the Swedish dividend investor, and today I want to talk about European dividend growth ETFs. Before we begin, I want to say that this is not financial advice. I'm just a guy on YouTube who wants to help people think differently about investing. Make sure to read the full disclaimer in the description down below. Ah yes, SCHD, the holy grail for ETF dividend investors. Well, at least for American investors. Thanks to the European Union, we have a regulation called PRIIP, Packaged Retail and Insurance-Based Investment Products. The EU says it aims to increase transparency and investor protection by ensuring that retail investors receive clear, comparable and standardized information about complex financial products. Yes, what would we plebs do without our overlords protecting us from harm? Anyway, SCHD, Schwab US Dividend Equity ETF, is an ETF focused on dividend growth. The dividend yield hovers at around 3.5 to 4%. They have achieved a staggering 12.41% compounded annual growth rate for the dividend. The expense ratio is almost non-existing at 0.06%. The fund holds around 100 companies, and they track the Dow Jones US Dividend 100, and they focus on high-quality, high-yielding dividend stocks. Their selection criteria is the following. Companies must have at least 10 years of consistent dividend payments, strong financials such as profitability, cash flow, and return on equity, and no real estate investment trusts. Their sector allocation are financials at around 18%, healthcare at 16%, consumer staples at 14%, industrial 13%, energy at 11%, consumer discretionary 9%, information technology 8%, communication service at 4.5%, and materials at 2%. Their top 10 holdings consists of AbbVie, Amgen, Cisco, Coca-Cola, Pfizer, Bristol-Myers Squibb, Chevron, BlackRock, Home Depot, and Verizon. Well, our job today is to find something similar for us European investors. I should note, there are workarounds to invest in American ETFs. Some brokers allow it if you qualify as a professional investor, but the Swedish brokers I have checked require you have at least 400 to 500k in dollar equivalent in capital for that. So, I checked my broker to find every European dividend ETF that they offer. You may have access to a few more, who knows? And I created a list. Now, there could be more ETFs with better track records, but we are trying to find something similar to SCHD. And something like SPDR S&P US Dividend Aristocrats ETF with its 2% yield won't fit here, since we would want a decent yield and a growing dividend. So what I did is I created a spreadsheet as always. I looked up some candidate ETFs and checked their dividend amount going back to 2018. We aren't exactly spoiled with choices. I'm going to go through the list and boil it down to a few ETFs that could fit. And then we can check their holdings, sectors, etc. This video would be very long if we looked at every ETF, especially some on the list that doesn't cut it. First off, we have the SPDR S&P Emerging Markets Dividend Aristocrats UCITS ETF. What's with these long names? I'm just going to say the names without the UCITS from here. Ticker SPYW. We can see some choppy dividends here. A cut in 2020, then growth until 2023, and then a lower dividend. They pay dividends twice per year, and as the making of this video, their yield is around 4%. Next one is Franklin European Quality Dividend ETF, FLXD. It's the same with this one, lower dividend 2020 and 2024. They have a quarterly dividend and their yield is just above 4%. Moving over to Amundi Global Equity Quality Income ETF, LGQI. Even worse track record. They used to pay dividends twice per year, but moved over to just once per year. The yield is 4%. Van Eck Morningstar Developed Markets Dividend Leaders ETF, VDIV. Same as the first two. Growth to 2020 and from there to 2023, and then a lower dividend. They have quarterly distributions and the yield is 3.9%. Amundi MSCI EMU Value Factor ETF. Again, not exactly spotless here. Amundi seems to like the once per year distributions as they went from twice to once. The yield is 3.9%. Sure, some of these funds have grown the last 6 years, but imagine if you were living on the dividend. Those years when the dividend was cut would have an impact. Yes, I know, dividends aren't guaranteed, and stuff will hit the fan sometimes. But look at SCHD. They have grown their dividend for 13 years, and I know past returns doesn't guarantee future returns, but I would like to think that a good track record is better than a bad one. LNG Quality Equity Dividend ESG Exclusion EM ETF. LGGM. This one is quite young, but already has a dent in its track record. Maybe the future will look better for this one, who knows? Quarterly distribution and a yield of almost 3.9%. SPDR, S&P Global Dividend Aristocrats ETF. CPRG. Dividend amount all over the place. Quarterly distributions and a yield of 3.9%. I want to add that some of these funds pay their dividends in dollars, so the yield is dollar converted to euro. The exchange rate of the dollar could make some of these funds to actually artificially grow the dividend in your currency, as shown here. This is the dollar to Swedish crown. The dollar was almost as low as 8 crowns in 2021, but 11 crowns in recent times. That's a gain of 30%. Now, currencies fluctuate a lot, and that complicates things, so we're just going to stick with the raw numbers, since we don't have a crystal ball. It could be that some of these funds receive their dividends in dollars, and with a stronger euro, that could drag down the numbers, something to keep in mind. Fidelity Emerging Markets Quality Income ETF, FYQE. We only have data since 2019, and the dividend has been slowly shrinking. Now that's quality income, right? Quarterly distribution and a yield of 3.7%. Moving on with Invesco FTSE RAFI Emerging Market ETF, 6PSK. The same pattern shows here. Growth, cut, growth, and shrinking. Quarterly distribution and a yield of 3.5%. I had hope for this next one. Invesco S&P 500 High Dividend Low Volatility ETF, HDLV. A cut at 2020, growth until 2024, where we just see a tiny cut. Sadly, that's not spotless, but I would say this is a good candidate to look into. Quarterly distributions and a yield of 3.7%. SPDR S&P Euro Dividend Aristocrats ETF, SPYW. Well, look at this growth since 2020. I get that 2020 was a pretty special event and that many companies suspended their dividend. But like I said before, funds like SCHD managed to keep their dividends stable. The only downside here is the twice per year distribution. Doesn't really matter that much, but I like getting my cash distributed more frequently. Almost touching 3.5% yield, and another candidate to look into. The last one on the list is Fidelity Europe Quality Income ETF. So close. Growth until 2024. With many European companies under pressure, this isn't really surprising. If we remove some decimals, it looks like the dividend amount is the same now as it was in 2023. Let's add this one to look into as well. Do you know any names in this list? Maybe you own one or two of the names. If you do, let me know in the comments. There are a lot of ETFs for us European investors. I didn't include ETF such as small indexes like the FTSE small caps or concentrated to only one country like the UK. I also excluded lower and higher yields since we're comparing it to SCHD. I don't think all the ETFs on this list is a bad investment either. You would surely do fine over a long period of time. As we saw, most had growth since 2018 or inception, with some cut along the way. Again, we're trying to find the SCHD of Europe here. Our first candidate, HDLV. Not exactly like SCHD, since they include real estate, and utilities tops the list at almost 18%. But healthcare and consumer staples tops the list. The only thing absent is financial. Maybe that's a good thing, or a bad one. We can see their top 10 holdings with Kinder Morgan at the top, Altria Group, Bristol Myers Squibb, AT&T, Verizon, Simon Property, 1OK, Vici Properties, Energy, and Dominion Energy. They hold 50 companies, so half of SCHD's 100. So not an apples to apples here, and their dividend history wasn't exactly flawless. Moving on with the next candidate, SPYW. Europe focused, as the name suggests. We can see Italy at the top, followed by Germany, France, and Belgium. Looking at the sectors, we do have financials at the top, but at a staggering almost 29%. That's a huge allocation to one sector. The second largest is utilities, followed by industrials, basic materials, consumer staples, healthcare, telecommunications, energy, real estate, and others. So the allocations match SCHD a little better. Top 10 holding consists of Ageas, Assicurazioni Generali, sorry if I butcher some of these names, Allianz, A2A, Unipol, Assicurazioni, Elisa, Bouygues, Sanofi, Terna Rete Elettrica Nazionale, and Ahold Delhaize. The last one is not unknown for me, since I hold them in my portfolio. They have 39 holdings total, so quite a bit fewer than SCHD. For the last one, FEUI. We can see the European countries allocation. France, UK, Switzerland, Spain, and others. And expanded, we see Netherlands, Italy, Sweden, Germany, Norway, and others at almost 14%. Taking a look at the sectors, we have financials at 16%, followed by industrials, healthcare, consumer staples, consumer discretionary, basic materials, technology, energy, telecommunications, and others at 14%. I wonder what those sectors could be. For the holdings, we have ASML Holding, Novo Nordisk, Barclays, NatWest Group, Nestlé, Roche, Novartis, Siemens, Louis Vuitton, and Unilever. Now, just looking at the holdings, these are pretty famous names, unlike the last ETF. But that comes with its own risks. For example, both ASML and Novo Nordisk have been pretty high flying, and since I believe they are pretty overvalued, the risk is to the downside. But this is a diversified portfolio of 86 names, so who knows? So, with this in mind, what conclusions can we make? There are no European equivalent to SCHD, but we have 3 decent dividend growth ETFs. I punched some numbers, and we also fall short on the growth of the dividends. HDLV has a 3% compounded annual growth rate since 2018. SPYW only has 2.1% CAGR, and FEUI, counting from the first dividend in 2019, has a staggering growth of 76% CAGR. But that's a little bit misleading, since the first dividend was so low. So, if we count from 1 year later, where they had 10x their dividend, we have exactly 12% CAGR. Nice. That's even with a small cut from 2023 to 2024. So my conclusions are, looking at just the historical data, the only ETF that comes close to SCHD is FEUI. But what if I told you there exists an ETF that had a small cut in 2020 and pays a pretty hefty amount in dividends, and has a 7-year compounded annual growth rate of 5.92%, and a 5-year CAGR of 7.54%. Enter Exact Nordic High Dividend Low Volatility ETF, ticker XACT, HDLV. Cue the Swedish national anthem. I'm sorry. What we have here is an ETF with a focus of the Nordic countries of Sweden, Finland, Norway and Denmark. The sector allocation is a huge 36% to financials, industrials at almost 20%, consumer staples, telecommunications, basic materials, consumer discretionary, technology and healthcare. Their top 10 holdings is Tele2, Telenor, Gjensidige Forsikring, Mandatum, DNB Bank, Sampo, Orkla, Nordea Bank, Telia Company, and Yara International. The fund consists of 45 companies. Exact writes, the fund tracks the performance of stable Nordic companies with high yields. The fund distributes cash dividends with the objective to annually distribute 4.5% of the value of the units at the time of the management company's decision about distribution. They pay dividends 4 times per year, but not quarterly. Instead, they pay in March, May, September, and November. Did I mention that the yield is over 5% currently? And that is when the ETF is trading near their all-time high. Their distributions went from 5 crowns in 2018, a small cut of 0.4 crowns in 2020, and then to 7.48 Swedish crowns 2025. I know this isn't really comparable to SCHD, but I do think it has a good track record and a decent yield. Keep in mind the currency exchange rate. In your currency, the dividend may be more or less, even if the distribution in Swedish crowns grow. Now, I could find info that shows it trades for around 13 euros at the making of this video, but I don't know how available this ETF is to European investors outside the Nordic region. If you have a good broker, maybe you could find it. I'm a proud owner of this ETF, and I'm continuing to buy and hold for a long time. It's not perfect, but I'd rather take the risk here with the high dividend than to have a 3% yield and a bad track record. It's not easy to find an ETF like SCHD, but there are some decent alternatives for us. Make sure to always look deeper into ETFs before investing in them. I hope you found this video helpful to navigate the dividend growth ETFs of Europe. If you did, give the video a thumbs up and consider supporting me by subscribing. With that said, I'm the Swedish dividend investor and I will see you in the next one. Ha det gött!